JB here. Hope everyone's doing outstanding. Monday, February 2nd. Welcome to February 919 on the Spine Morning Talk. Really quick about the market. Some names I'm looking at go from there. S&P futures in the red off the lows. On the heels of last week's green. It was markets were green last week. I wouldn't say every headwind you can think of was thrown at it, but all the things that went on, the Fed meeting, the sell-off of Microsoft, UNH, you have the headlines now, the government shutdown, which are back. Then you have all these geopolitical things. You still have, you know, uh, the Greenland situation, and now this, and then you had gold and silver just going bonkers, right? Crazy stuff. And then now this weekend throwing crypto, so Bitcoin down 6, 7, 8% at times. Actually, it's down 7% now. This weekend, I mean, think of all the geopolitical things going on right now. You still have headlines with Israel and Hamas. You have Ukraine still going on. Then you have an armada of U.S. ships going to the Middle East and Mediterranean for Iran. Um, Still have things going on with China. You have the U.S. threatening or POTUS threatening tariffs on Canada if they're doing a deal with China. I can go on and on, right? The point is, there's so many different headwinds. You would say, okay, where's the market? It'd be down, whatever. I don't know, 5% from where. I don't know. I'm just making up a number. And then also take these moves in the commodities, gold and silver. I think silver's down 30 something percent from its highs. Gold down 10% Friday, and then from futures opens up in the green, dips. Next thing you know, it's down at 4,500 again. Just remarkable stuff. And I was posting it last week. It's like something breaks at some point, right? When you have these big moves, I don't think people are positioned, especially when they're levered and have leverage. People riding gold all the way up. If you keep piling into gold on some kind of leverage, at some point there's a point where it gets unwound, right? And then the same with Bitcoin here. You have a strategy over the weekend getting to the point of flat or actually red where they're positioned, which at times was like kind of there. Oh my gosh, we told you so, because their purchasing and crypto was paying out, and then all of a sudden it's like, what happens if Bitcoin goes back down to 20,000? What happens to strategy, right? And then all those positions that might have to get unwound, the selling, the folks who have raised capital, just all these different things. In a nutshell, I'm going in general stuff, so I just want to get in specifics, but just remarkable to see the markets hold up. To me, I think it's just kind of like, if you put it in a nutshell, it's because the U.S. economy is doing better than what folks had anticipated, and it continues to do well. So until that changes, that kind of is the cushion. And then the U.S. debt, we got to worry about the debt. At some point, yields have to come down, or that has to be addressed, or a year, 2, 3 years from now, there'll be some serious repercussions. All right, that's overall market. We are coming into February, which is historically weak month. It's like one of the worst performing months. So not a good thing, but I guess at least you expect it. So if it outperforms, that'll be a good thing. All right, that's overall markets. Also on the SPY. So you take a look at last week, you would think all the crazy swings. The SPY traded a 1.9% trading range. Liberation Day, or whatever you want to call it, tariff day, whatever. The market traded like it was like a 10% range on the day. 1.9% range was like a matter of 10 minutes. So to see the markets trade in a 1.9% range last week with all the things that went on, the sell-off in software names, Unite Healthcare, Microsoft, so on and so forth. I think that's impressive. So we can shake that off. We'll see if the markets find some footing today. 686. I always say I'm not patting myself on the back, but I'll pat myself on the back. My annotations, again, these are support resistance lines. They're not a be all end all. They're just guidelines. They're like the bumpers on a bowling alley when your kids are bowling and you want to put the bumpers in. Just a guideline, right? So 686 kind of spot where hopefully we held and we can bounce. We did that last week, or got around there and bounced. Well, that will be a similar spot that's important. And then 680 for me in regards to getting put hedges, because now you start looking at 50-day moving average sitting there at 682. All right. So this week, 693 resistance possibly today, 686 support, and maybe we can find some footing. But it's a big week. So this week we have earnings from Amazon and Google. Google is probably the most important earnings, because their hands are in so many different things now, in regards to the AI side as well. And now you see what's happened in software, and also I'll flip it around to the ad business too, and you see some of these names that have just gotten pummeled the last couple of weeks. So if they can at least paint the picture that things are fine, I think. And then the capex spend, right? So trying not to go into too much of a rant on overall markets. All right, so that's overall markets. So 693, 686. 680 is my line in the sand where I'll look to get put hedges. Go from there. And then the amount of stocks trading over the 200-day moving average actually went up. Friday, market sold off, and the amount of stocks trading, the trend is your friend, right? So, all right, overall markets, individual names. So first gold, right? Gold's a name, I'm not going to go on a rant on quick and gold, but I was talking about on Thursdays, possibly trading for downside. Didn't want to chase. And then Friday was like, I got to get my hands on something, because if there was a pull or a continuation, it was going to be a bigger one. Got the GLL calls because I think those offer the decent risk reward in regards to the premiums. Uh, sure enough, gold sank. Closed some of the GLL calls out for close to 100%, and then a little more than 100%. I'll just hold the rest. It was at 20, almost $23 in the over hour session when gold went down to 4,600. It goes down to 42. I think GLL is over $30. So if that's the case, I have the March strikes, plenty of time. I'll lock a few more in if I get close to 200% or what have you, and then I'll ride the rest. And then it's so volatile, it doesn't make sense for me to get any more strikes just because premium is going to be elevated. So that's kind of how I'll trade it. And funny, take a look at gold. These are my annotations. If you look underneath, over the years, you can see gold has gone up quite a bit, because I used to have annotations at 1,700 and 2,000, 2,200 bucks. Those are ancient history. All right, that's overall on gold. So that's that. And also, I was looking at the miners. Do I do dust or J dust? But again, I think that's it. I'm not going to touch anymore. And you look at GLL, and not that this matters much, but the 50-day is 2481. Oh, I just deleted the chart. All right, so that's that. GameStop, right? Similar to gold. I don't want to be in a crowded trade, and it seems to me like, especially recently with Michael Burry going in, that GameStop's always been a crowded trade, but just even more so. And sometimes, to me, it's like, how can you have an edge on the market if everybody's doing the same thing? And if everybody's in calls and bullish GameStop, I just don't see how it goes bonkers. Well, maybe it does. Nice little article on Wall Street Journal Friday morning in regards to his plans of possibly doing an acquisition of some, I don't know if it would be a consumer name, retail name. But if he's, I always talk about Ryan Cohen being a great steward of cash. If you had someone a CEO of a company that had a lot of cash and you wanted to deploy that cash, Ryan Cohen's probably one of those people that you would say, yes, right? He's the person. He's the one I would want doing that. And there he is. He has the opportunity to make something happen. He also has a vested interest with that huge financial compensation package. And not just because you're compensated for a company to get to $100 billion valuation doesn't mean that just because of that it's going to happen. But I do think it was going to happen regardless, but it just adds more incentive. Sitting here was under 24, gapping higher above that 200-day moving average. You start looking at some of the areas. It looks like a very, I would call it blue sky, but a lot of open space there between 24.50 and 28. So maybe it takes some time. If it gets over $25 today, I might look for some more strikes to play, follow through, because similar. I'm not saying I had FOMO Friday, but I didn't. It's a name that I've continued to look for upside. It just hasn't traded to what I think it should. I think it should be north of 30, if not substantially higher, with its cash position. It's profitable, no debt. It's not like the company's turning through cash and it's earning. It's cut a lot of expenses to get to the point where it is. So, and they can leverage their existing locations. There's just so many opportunities if they get it right. All right, that's GameStop. Reddit, I had some strikes at the end of the day, more for the premiums that are going to hold up with earnings on Thursday after the close. My thoughts here on Reddit. 195, it gets there before Thursday after the close. I think it'll be an opportunity to close some of the calls out to cover costs. If that doesn't happen, I'll probably close them out and revisit. But Reddit sold off, and it's not even like it's a software name. I guess you could say it is. I don't know if it's negativity, but it's down from 260 down to 180 in a matter of like 12 sessions. So that's that. Just really quick, 3 minutes to the close, to the market open. Serve Robotics, 3 days in a row to the downside. Thankfully closed my February strikes for some profits. Always a name I'm looking at. And then earnings this week. There's other names. Impinji, right? PI, which is a name kind of does like the chips and sensors. Always a name that's kind of under the radar. And then I look, it has earnings, and it's up like 20, 30%. It's had like the last 3 or 4 quarters of like 20, 25% moves on earnings, and most of those to the upside. The issue is only monthly strikes, and the spreads are expensive. So I might try and dabble some positions to play for earnings. I think they're either Wednesday or Thursday after close. Align Technology is always a name I'm looking at for some earnings. PayPal reports tomorrow before the open. Another one of those mind-boggling names. I liked it when it was in the high 60s, and I traded for some small profits. And then here it is in the low 50s. And I'm like, if you liked it in the mid 60s, you don't like it here. It's just, to me, it's like I can like it. It's what the market likes. And the market right now doesn't like for some reason. Maybe there's an opportunity to play some lottos. So don't be surprised that I try some strikes intraday, maybe flip them, ride the rest into earnings. Anyway, 2 minutes to open. Let's have a great day. I'll be back in audio later. Rock and roll.